All right, what's going on, folks? Courtney Rollins with the Life and Transition Expert YouTube channel, Facebook group, and podcast out here in lovely Aruba. About to celebrate a couple of years with my beautiful wife. She over there working hard, so I figured I'd work hard and put some content out while we're also enjoying and relaxing in between times. So today we're going to talk about the difference between term, whole life, and universal. And it's quite I want to keep it in simple terms, especially if you're an agent and you're talking to people. A confused mind says no. And it's really great if you have an illustration, simple illustration that can show people the difference between these insurance coverages. They all work for different reasons. It's like the person who has braces. They don't want braces, they want straight teeth. So depending on what you want and what you need or what your client wants or needs, um, is going to decide whether or not which type of coverage is best for them. So term literally says in terminating insurance. It is temporary insurance. It's like you're renting insurance, knowing you're gonna have to move or you're gonna have to be evicted. It is great for a short amount of time. A mortgage on a house, on a boat, or something. You pass away, someone passes away, their family doesn't lose that possession because of the insurance you have. The challenge with term is that it does terminate. It is not ideal to cover your final expenses. My mom, love you, mama. She has a term policy. She's been paying on for 13 years. It's going to expire in 3 years. We hope and pray to God that it does not pay out because don't want to lose my mom, right? So I had to put a whole life policy or find one for her for because of the age group she's in and what she's trying to do with that policy. She still kept the term policy because it's if insurance. That's literally what it is. Shout out to Rev Shedrick. I love that phrase. If insurance. Term is if I pass away. Now whole life is different. It's permanent. That's another name for it. Permanent life insurance. It covers your entire life. And because of that, it usually has a lower payout. It's a guaranteed payout, so it has to be a lower. They are business, they are a company. Like a term policy, they can quite often offer a higher payout because only about 2% of them actually pay out. It's not designed to actually pay. It's designed to cover you, give you that peace of mind. Whole life is cover your entire life. So since it is a guaranteed payout, usually the payouts are lower. Sometimes being able to qualify for them is have higher restrictions. I focus on final expense, and I help families get simple issue same day coverage. So there are great carriers and resources out there that would give you same day coverage, first day coverage, all that great stuff. Another aspect of whole life is that it actually builds a cash value. You may have heard of folks talking about being able to use their whole life policy to pull loans out or take cash out, things of that nature. That's what they're speaking to. That's a whole life policy. Covers your whole life. It actually builds a cash value. The payouts are quite often lower because it's guaranteed to pay out. There's tons of riders that come with it. Universal life. Universal life or universal index life, those are policies that you actually are they're life insurance policies, but they're also designed to supercharge your retirement. They're not designed to necessarily to cover your entire life if you use them. There's a way you can use them improperly, and it can risk uh, losing it when you need it at the right time. So universal policies are awesome because you get to participate in the stock market and in investing just like carriers and companies do without premiums. The way insurance companies make money is not off our premiums; it's off taking the premiums and then investing them into the market. And so you get to do that as well. The challenge, though, is insuring you is based on your age. So the cost of insurance, if that goes up and the cash that you've accumulated in that universal policy, if it is if the cost of insuring is lower than the premium they're giving you per month, it starts going into that cash value buildup, and there is a risk of it canceling. Now, all of you great, find a great agent that help explain it to you. Make sure they're asking you tons of questions. Make sure you're asking tons of questions so you can find out what's ideal for you. Feel free to reach out to me as well. I love going over this stuff, figuring it out with folks, and just helping be a part of people's journey. All right. Well, I'm about to get back to Aruba. Cheers. This is Courtney Rollins with the Life and Transit Expert YouTube channel, Facebook group. Hit that like and subscribe. And as we always say, let your light shine. Cheers.